Well, we got some big inflation news this week, all of it in the right direction, y'all. Let's talk about it. In just a moment, we're going to talk about the consumer price index came out yesterday, producer price index came out today. That gave us some good relief, y'all. So we're going to see what it's done to the market by diving in, looking at mortgage news daily, average for a 30-year fixed rate conforming loan, 6.69% today. We were at 6.77% in that survey 1 week ago. We were at 6.75 a month ago. Y'all, the 30-day low was back on the 17th of July. It was 6.63, so we're getting close to that with these numbers, very close to it. We were at 6.85 as our 30-day high, and that was on the 23rd of July. So that's how much rates have varied over the last 30 days. A little over a quarter of a point is how much rates have moved up and down during that time frame. And as folks are no doubt becoming aware, the more we do these videos and seek to educate the folks that consume this information, rates change every single day. The market moves rates in real time. A lot of folks are thinking that only the Fed does that. It's not true at all. The direction that the Fed takes does have an influence on mortgage rates, but they don't set mortgage rates. So let's get right into the CPI numbers, y'all. It was up 0.2%. That met market expectations. And when we look at May, June, and July, core CPI, it's been down all three of those months. And in fact, if you annualize these last 3 months, you get an annualized rate of 1.64%. Y'all, that is well below the Fed's target of 2% for annualized inflation. So a lot of folks would look at that and say, you know what? 3 months is a sufficient runtime. The Fed ought to realize they've got the data that they need to say we're at goal as far as any future tightening. We're going to look at Fed futures in a second and see if that's the case. And then to back that up, y'all, we got producer price index today, also up 0.2%. It was expected to be up 0.3%. So it was actually softer than expected in a good way. So we continue to see inflation that's better than expected. So that's obviously good news. What does it mean for CME Fed Watch futures? Y'all, a week ago, we were looking at a 55% chance of the Fed raising rates at their meeting on September 16th. That is their next meeting upcoming. There is now only a 35% chance of a hike at that meeting in September. So we've seen, not quite, about a third of the folks that were expecting a hike in rates are now no longer expecting it, according to Fed futures. So we're headed in the right direction, y'all. I've said for the last several weeks on this video that I felt that Fed futures were way overpricing the possibility of a hike. I don't think with the new direction of this Fed, particularly in light of the weak employment report that we got last week and these tame inflation reads, we're just taking all of the wind out of the sails of those folks that would take a more hawkish view and want to see tighter policy at the Fed. I just don't think we're going to see it. Now, are we going to see cuts? Well, right now, there are no cuts priced into Fed futures, y'all. But if we get another weak employment report, we get something that really surprises to the downside on both inflation and employment, then we may see Fed cuts start getting priced back into futures, in which case we're likely looking at some economic data that is distressing. As we've said many times on this video, distressing economic times generally translate into lower interest rates. The Fed is far more accommodative in a recession, as an example. And when you look at recessions over the last few decades, they correlate almost exactly with record low yields during those timeframes. So hopefully, y'all, that is not the reason that we see better interest rates, but this is a call that focuses on informing folks about interest rates. So are there storm clouds on the horizon with regard to potential recession, furthering deepening employment situation? Well, it's something we're keeping an eye on. Right now, things look awfully strong. Dow is at record highs. If you're looking at your 401k statements, you got to be celebrating a little bit based on where the market has gone. Let's pray for that to continue, but let's also pray for a resolution overseas so that we can get a handle on energy costs and put the last nail in the coffin of inflation, at least for the short term. In any event, hope this information is helpful for you and for your clients. If it is, give me a shout. We take the same care, y'all, in processing loans. We do that for a living here. You've got my contact information. Always happy to talk. Be blessed. Stay safe. We'll talk to you next week.